Hey there, it's Tricia with Easy E-mini Trade, and today I want to show you how you can take divergence trades and use the tick to confirm. And Pete Z showed me how to do this. I've used the tick for a long time for other things, but I've never used it for timing divergence trades until he turned me on to it maybe 6 months or so ago. So I hope that you find it helpful, and if you have any questions, shoot me an email and let me show you how to do it. So what you're looking at is the NQ on a 4-range chart. That's what I generally like to trade off of. And you can see pretty clearly here that this afternoon we had an established range. We were going from resistance to support, resistance, didn't quite hit support here, resistance, support, you get the idea. So I'd love to take divergence trades, and divergence, if you're not familiar with it, you can go to babypips, babypips.com, and then just search for divergence, and then you'll see that there's a cheat sheet there. You can print it up and use it. I only use regular divergence. I don't use hidden divergence, and so this would be regular divergence. So I'm looking for price coming up to resistance, and then I'm looking for a higher high on price here than here, and then on my stochastic I'm looking for a lower high here than here. So what that's telling us is that this is not backing up this high here on price. So that's giving us a heads up that when we do have divergence, that in this case, being at resistance, price is probably going to pull back. Now, we don't ever obviously know if it's only going to be a 1-bar pullback or a 2-bar pullback, but when you're going sideways or even not going sideways, the likelihood is that it's going to pull back to an area of support. So in this case, like I said, it didn't quite hit this area here. This is the 50% fib retracement area. Didn't quite hit that. It held the 90, but regardless, there was plenty of room down to the 90 as well as support here. Then off support, you're looking for a lower low here than here, for example, and a higher low here than here. Or here you can see it comes down to support again, and it's still giving us divergence. You can see lower lows here than here, and a higher low here than here. So that's giving us a heads up that it's probably going to bounce. So let me show you how you can use the tick to time that. So I guess really I should say confirm it, not necessarily time it. That could be a video for another day. So on the left here I have the tick, and depending on who your broker is, you might not have access to it. The tick is based on the New York Stock Exchange, and I'm just going to give you a really simplistic explanation. This is the zero line here. When you have majority of New York equities trading on an uptick, the tick's going to plot above zero, and if you have majority of them trading on a downtick, it's going to plot below zero. So you can watch for divergence on the tick as well as price. So even though I'm trading the NQ, which is obviously the NASDAQ, I find the tick a better gauge even for the NQ. If you prefer, you can use the tick Q. It's totally up to you, but I don't find that useful to me, but this works because generally the indices are doing similar types of movements. So right here, as we were talking about before, you can see on price I have a higher high here than here, and on the stochastic I have a lower high here than here. So ideally what I want to see on the tick is I want to see divergence as well. So what I would want to see is I would want to see the same type of lower high here than here like I have on the stochastic. I would want to see that here on the tick. So right here coincides with this high here on price, and this high here coincides with this high on price. So you can see that's doing the same thing as the stochastic. And this is on a 30-second chart, and that seems to work really well for what I'm doing here off the 4 range. And some people will put a 1 period moving average on there and look at that, but I have an easier time looking at the actual bars on the tick. And then I know I'll get questions, so I'm just going to tell you I have lines drawn at 0 and 600, 800, and 1,000 plus and minus. And then I have alerts set on 800 and 1,000 plus and minus for the tick extremes, and I'll save that for another day as well. So I don't have confirmation on this tick chart to basically take this as a short per se. Now you could be aggressive and take it anyway and have an idea of where price would hopefully get to. But when the tick matches, you have definitely a higher probability that the trade is going to work out. And I'm going to just show you the settings on my stochastic because I'll get 1,000 questions on that as well. So the settings on that are 14 for K, 3 for fast D, and 3 for slow D. And I use 80 as overbought, 20 as oversold, and then I'm just drawing the K line. So I don't need both lines. So that's what I've got there. So you could take this or not take it, it's up to you. And then what I would do is I watch for that stochastic to get back below 80. If I was going to take this as a divergence trade, I would get in under the bar that was giving me that rollover under 80. Now this remained under 80, so realistically this would be the bar that I would get in under right there. So let's move on to the next one. So I've got the next one marked here at 118. Never got to support, so I'm not really interested. Even though there is some slight divergence here, I wouldn't be comfortable taking it because the actual support is here. And if I were to buy it off the 90, I still have a good chance that it would come down and retest this area and then wind up stopping me out. So moving ahead to the next one at 118 on the tick here. So let me just scroll ahead. So here we are at 118. So higher high on price here, lower high here, and then on the stochastic, I've got a lower high here, then here. So you can see I've got divergence, right? Higher high here, then here, lower high here, and then here. So they're doing different types of movement. Looking at the tick, this here, where I've got it initially started as marked, this is this area right here, and then this, and I'm just going to remove this line so you can see it. This bar here, the shorter one, represents the high here. So I've got divergence. So I'd watch for that stochastic to roll over below 80, and then I'd get in under that bar. And realistically, it would be this bar here that would get you in under that bar. And so you can just continue that way all the way through if you want to check it out, or watch for it when you are trading. I'll show you one more here at 141 off support. So you can see right here we've got a low. Here we have a lower low here than here, so I marked it. And here on the stochastic I have a higher low here than here, so I've got divergence. When I look at the tick, I've got, this is the start of this low here, right here, and then this is the low of this bar. You can see it right here at 141, and that would be this bar right here. So if I were to draw a line from here to here, I've got divergence. So realistically, I could take the entry realistically above this bar or this bar here, and it takes a while. It would have worked out, but comes back down to support, would have never stopped you out, and we still are showing divergence. So if I scroll over here a bit, and I'm just going to scrunch this up so you can see both of these bars here. So come down, tries to break through the 50% fib retracement area that we've been using as support, but we still have lower lows on price and higher lows on the stochastic. You can see that right there. And so we marked this. Remember, this was right here, is this low here, and then this, let me get rid of this right here so you can see it. Get rid of my line. right here on this bar right here, this green one, that is the tick that's forming on the low here. So I've got divergence to the upside, so it confirms that as well. So again, you take it and away you go back up to realistically resistance again. And so you could keep doing that over and over and over again. You want to make sure it maintains the range though, but if you're going to do divergence trades, make sure if you're going to short off divergence to the downside that you're at resistance, and if you're going to buy divergence to the upside, make sure you're at support. So I hope you find that helpful, and Pete Z, thanks for turning me on to that, and you guys have a fabulous day.